Hello, everyone, and welcome to another episode of Selling Greenville, your favorite real estate podcast here in Greenville, South Carolina. I'm your host, as always, Stan McCune, realtor right here in the Greenville area, and you can find all of my contact information in the show notes if you need to reach out to me for any of your local real estate needs. And just a reminder, as always, please support the show by liking, rating, reviewing, commenting, all of those things on YouTube, Audio Boom, Spotify, iTunes, whatever. If it has an option to support this show, please do that. And the other way, okay, there's one more thing I'm asking you guys to support the show, and that is by supporting our sponsor, Piper Insurance Group. They do home, auto, and umbrella insurance all across South Carolina, North Carolina, and Georgia. They are my go-to. I've referred a bunch of clients to them as well for home, auto, and umbrella insurance. I cannot recommend them enough. So you guys need to contact them for a free quote today. They're independent. So they're not just like affiliated with, a Geico or a State Farm or someone like that. So they can price you around to a bunch of different carriers and see who offers you the best rate. They could even have you with investment properties too. I've got a lot of investors, current clients, past clients, people that aren't clients that do everything on their own but still listen to the show. Listen, guys, I highly recommend that you reach out to Piper Insurance Group to help you out with those investment properties, flips, rentals, ground up new construction. Even commercial, all of those things. So Piper Insurance, their contact information will also be in the show notes. So please reach out to them for a free quote today. Okay, I was recently, well, I should back up for a second. Actually, before I get too in the weeds here, first off, if you're watching on YouTube and you're wondering why I have a shiny shirt on, it's because it is college football season now, and I've got a Clemson shirt that I'm wearing that just happens to be really shiny, and I didn't think about that when I decided to record the show. So I apologize for that, but it is college football season. I am proudly wearing my Clemson shirt right now. Today's been a work from home day for me, so I don't have to wear my fancy clothes, and I might not even be wearing pants. You guys don't know. You don't see me below the waist in this show, but if you're watching on YouTube, you do see, I look like a marlin or something with how shiny I am. But I should say that this is going to be the first month in a very long time that we don't have an episode talking about the Greater Greenville Association of Realtors market stats, and that's because we don't have them yet. So we don't yet know what happened in the month of July. We're going to get, I'm sure I'll get the market stats probably tomorrow. Excuse me. And I just am not going to record that episode for this week. It's just going to have to come out next week. So we're going to have 2 months lagging data on the Greenville market stats, but that's okay because we've got something else to talk about. So I was going through my old podcast from my 2021, just, I was actually looking for something. I wasn't just doing it out of curiosity. I was looking for something specific, and I found a really interesting episode that I had done. I believe it was in 2021, and I called it All Chaos Has Broken Loose. Oh, I need to silence my phone here. Starting to get some notifications. You know how it is. I'm a realtor. All right, everything is silenced. Rookie mistake there. So I had an episode I did back in, I believe it was 2021, that I called All Chaos Has Broken Loose. And it was just what I just talked through the dynamics of how crazy the market was and just broke down a bunch of interesting stats on both the supply and the demand of the market at that time. Well, I decided this is fun. Why don't we compare the market right now? I'm recording this on August 26, 2024. Why don't we compare the market right at this moment to what it was back then when I thought the market was chaotic? So that's exactly what we're going to do. So we are going to be talking stats, but it's going to be less of the current, year-on-year kind of stats than what I talk about typically when I go through our monthly market stats. So we're just going to start. I'm going to go through straight from the top what I talked about in 2021 and compare it to right now. So for starters, at the time that I pulled the data back in 2021, there was 1,241 active listings. That was insanely low, right? Insanely low to have 1,241 active listings. How does that compare to now? I pulled this just a few hours ago. We have 4,114 currently active, and I've been tracking this for a while, we've been hovering kind of in the low 4,000s for several months now. So we 1,241 active listings back in 21, 4,114 now, basically 3.5 times the supply that we had back in 2021. Obviously a huge increase, and this is what we're talking about when we talk about the market rebalancing or the market shifting. These are some of the things that we're talking about. What about homes that were pending or under contract? In 21, there were 3,232 homes under contract when I took that snapshot. When I took the snapshot today, there was 2,323. So this is confusing, right? It's a lot of twos and threes. 3,232 versus 2,323. I don't know how that worked out. But here we go. Now we see the supply side is 3.5 times higher than it was back then. On the demand side, demand is, roughly what? I don't know, 30-ish% lower than what it was back then. So higher supply and lower demand causes the market to slow down. That's basic economics. But the other interesting thing to think about is comparing the active listings to the under contract listings, right? So we had in 21 when I did this episode, 1,241 active listings versus 3,232 under contract. So if we did this as a ratio, it would be a decimal if you divided the active listings by those under contract, whereas now we have 4,114 active versus 2,323 under contract, almost double the active listing, not quite double, but almost double the active listings versus what we have under contract. So that ratio is a very interesting one. And actually, I think, in the future, I think I might track this ratio more closely, because I think that there might be something there to this actually kind of being a way to determine what sort of market we're in. Are we in a buyer's market? Are we in a seller's market? That's a debate that can go on for forever. People typically look at inventory and months of inventory to determine that. But I think that if we looked at this ratio, that actually might be a good way of doing it as well. So I'll be, thinking through that. I've got a gazillion ideas in my brain these days, for content creation and for how I'm going to keep tracking the market. And so that's one of them. You guys can steal that if you want. All right. Another thing that I notated back in 21 was that the past 24 hours at the time that I had recorded that, 1,497 homes went to pending. So in other words, 1,497 homes went under contract within 24 hours. The past 24 hours now, roughly speaking, obviously not perfect. I'm recording this in the middle of the day, so I kind of did this more like 36 hours, but close enough. 1,033 homes. So again, basically 30% fewer homes under contract the past 24 hours versus that period of time in 2021. Now let's break down what all of these supply numbers equate to. And some of these are pretty eye-popping numbers. So in 21, 912 of the active listings were single-family homes. Just your standard run-of-the-mill, not a townhouse, not a condo, not an apartment, nothing like that. Just a single-family detached home. Of the inventory currently available now, 3,508 are single-family. So, almost 4 times the amount of single-family homes are available on the market now versus this crazy period of time in 2021. I think that's really noteworthy, right? You have 4 times the options if you're looking for a house than you did just 3 years ago. So is it a good time to buy? Well, it depends on your situation. But from that standpoint, it is a much better time to buy than it was 3 years ago. Now, it's not a better time to buy from the standpoint of mortgage rates and all that, and affordability and all of those things. I get that. But there's a lot more options out there for home buyers right now than there have been in years, right? Even going back to like 2019, we have to go back to like 2018 when we've had supply at levels the way it is right now. What about condos and townhomes in 21? 302 of the 1,241 active listings were condos or townhomes. Right now, 492 of our current active listings. So that one I find interesting too, right? So it did go up. It did go up by, maybe 60%. So it's nothing to completely, laugh at, but it's only went up by 190 units. Whereas the single family homes went up tremendously. They went up 400%, and went from 912 to 3,500 and change. So not a ton of condos, townhomes. I know people think, oh, Greenville's building so many condos and townhomes. Well, a lot of those are for rent at the end of the day. And just not a ton of these are coming for sale on the market. Yes, we do have more than we did back then, but it's not a huge dent. It's not a huge piece of the overall pie. What about mobile homes, modulars, and just other? 27 of the 1,241 active listings in 2021 were mobile home, modular, or other, whereas right now 112. So that's gone up basically four times as well. What about new construction? Back then, 610 were new construction of the active listings. 1,619 new construction active listings are now currently happening. Now, again, I want to make sure that we understand context here, because back then, a lot of builders weren't putting their listings on MLS. They didn't need to, right? They didn't need to waste time doing that. They had people just walking into the model homes and just buying homes left and right. And they didn't need to go on MLS to list it. But as things have slowed down, more new construction has been having to be listed on MLS in order to bring potential buyers in, to generate interest, to generate buzz, all of that. And so here we are. I don't know if we have truly that much more inventory than what we had back then in new construction. It's just that some of what some people would call shadow inventory, the stuff that isn't in MLS but that is actually for sale, I think some of that shadow inventory from 21 now is no longer in the shadows. Now it's actually on MLS. Now, of the new construction, this is also very interesting, 534 of the 610 new construction actives that were in MLS back then were not built yet, or at least hadn't been completed. So it was incomplete new construction. Almost all of them, right? There were very few that were completed new construction. Those were just getting eaten up right away by anyone that was looking for a house. Whereas now, out of the 1,619 new construction active listings that we have, 1,139 of those are in the not built yet or not completed yet category. And so that means that, whereas back then we had roughly 60 new construction completions that were active, now we have almost 500 of them that are active. So that is a huge increase, nearly a 10x, not quite 10x, but close to a 10x increase in terms of just new construction active inventory that is on MLS. All right, now let's pivot away from new construction. Of course, if you're looking for housing right now, new construction can be a great option. Okay, a lot of people are kind of jaded to new construction because they feel a lot of it looks cookie cutter. At least the new construction that's being built for your standard middle class buyer. But some people think they look too cookie cutter. Some people aren't happy about the lot sizes. All of these different things. But nonetheless, I've had a lot of new construction closings for clients over the past few years, and there are a lot of great options out there if it fits what you're looking for. All right, so now let's pivot away from new construction. Let's talk about, out of these active listings, what are we looking at per price point? So at the less than or equal to $100,000 price point, there were only 19 active listings back in 2021. Well, guess what? That hasn't changed. But the days of there being homes for at or below 100,000, those days are gone. There's 20 of them currently, so basically unchanged. And I mentioned last time, I'll mention it again, that could include some rentals. Sometimes realtors accidentally will list a rental home as if it's for sale for like $2,000, and what they mean is that it's $2,000 a month. So that might be confounding some of the data, but basically there's nothing for sale at that price point. What about the 100,000 to 200,000 price point? Back then we had 160 of them for sale. Now we have 238 of them for sale. So that's no small increase. That's like a 50% increase. So that is something that's noteworthy, although 238 isn't a lot. But that's something, right? If you're in the below 200K price point, having 238 options is a ton more than having 160 options, because it's just slim pickings all around. So every additional inventory unit that can be in there is going to be a great find for you. What about the 200 to 300K price point? Back then it was 535 of them were active. Now 1,305 of them are currently active in the 200 to 300K price point. Again, great news if you're a buyer. That is very classic, at least for the way the market is right now. That is typically your first-time home buyer is going to end up in that 2 to 300K price point, and they have roughly 2.5 times the options versus what they had 3 years ago. What about the 300 to 400K price point? 220 active listings back then, 1,100 active listings currently. So that one went up by 5 times in the course of this 3 years. So there's 5 times as many homes in the 300 to 400K price point as there was back then. Again, that is great news for buyers. What about the above 400K price point? Back then there were 466. Now there's 1,449 of them. So over 1,000 more homes listed that are active in the above 400K range versus what it was back in 2021. So if you're looking at that, that tends to be that, that's going to obviously include some luxury housing. That's going to include some nicer, upper middle class housing. It's going to include some homes that are just unique or that are on a substantial amount of land or things of that nature. And so there are a lot more options. So all chaos had broken loose back then. All chaos has not broken loose right now. Actually, the market is pretty slow. I have felt a slowdown quite a bit. Everyone I've talked to has felt quite a bit of a slowdown. It's going to be slow for the rest of this year. That's just the reality of the situation. Once we hit Labor Day, I think it's going to slow down tremendously. So if you're a seller, you want to get your house on the market ASAP. You don't want to find yourself in October and November trying to offload a house when the market really cools down. If you're a buyer, you have way more options than you normally do. Now, will the 4,000 and change actives will stay at that level? Typically, we would see inventory start to come down. That hasn't happened yet, right? Like I said, we've been in this low 4,000s range for some time now. But I do think once we get into the fall months, supply will start to go down. Probably not as fast as the demand will, but the supply for sure will go down, or will probably dip back down into the high 3,000s if I had to guess. But long story short, the market very different than it was when all chaos had broken loose, and that is a good thing. I don't look back fondly to the time when there were only 1,241 active listings. Like, I represent a lot of buyers as a realtor, and it's hard when, it was just crazy. I'd be showing 10 to 12 homes to a buyer. We'd be putting offers in almost all of them and would just be getting outbid over and over and over again. And it was, cash buyers over and over again. That was the crazy part, is that, everyone was trying to buy things because financing was so cheap. Mortgage rates were so cheap. But in spite of that, there were all these cash transactions that were coming in. They kept winning out on so many of these offers. So I don't miss back then. Trust me about that. Now, I wouldn't mind if the market was a little bit more interesting right now, right? I don't care for it to be super slow. It hasn't gotten to that point just yet, at least not for me. But I wouldn't mind if it picked up a little bit. But let's not go back to what happened back then. I'm a little bit concerned, to be honest. We know that interest rates are getting cut soon. The Fed chairman from Jackson, Wyoming, he announced that he's ready to start cutting rates. I think that it's not so much a question of whether they'll cut rates in September, but how much. Is it going to be 25 basis points or 50? I tend to think it's going to be 25, and that we'll start to see, multiple cuts happen in the future. So rates are going to start to come down. But we don't know what's going to happen in the broader economy. And we also have a presidential election, and we don't know what the outcome of that will be. Because particularly Vice President Harris is talking a lot about housing stuff. Some of it I like, some of it I don't. Maybe I'll get into that in a future episode. But there's a lot that could happen in the next few months and going into next year that could really swing the pendulum in a variety of different ways on housing. And if first-time home buyer tax credits start to go out, watch out. I don't think we're going to get back down to this 1,241 active listings range, but we would certainly see real estate inflation start to take hold again, and we'd start to see demand start to flood the market again, and then that would result in supply starting to get absorbed, which is exactly what happened all those years ago. So it's going to be interesting to see. It's going to be interesting to track, and I will be giving you guys the entire scoop all the way. So please keep watching, keep listening, hit the subscribe button, like the show, rate the show, review the show. Reach out to me if you need a realtor in Greenville, South Carolina. Reach out to Piper Insurance Group if you need a home, auto, or umbrella insurance company. And I will see you guys and talk to you guys next time.